Steve and I are both on the Maine Bankers Association Executive Committee. And as bankers, we're always talking about what's happening in the industry and where we see trends going. And it was just a natural conversation that evolved. I wouldn't say who said what first. It's just conversations that all CEOs are having about how do we get more traction and, more scale to serve the market.
MEREDA Matters.
Advocacy.
Thoughtful.
I get inspired by my colleagues.
I think the value of MEREDA is the people.
The value of MEREDA? The value of MEREDA is immense.
Because MEREDA matters.
Welcome, friends, to another episode of MEREDA Matters, the podcast that lets you listen in on conversations with the people who are driving responsible developments in Maine. I'm Josh Soley, your host today. MEREDA, which stands for the Maine Real Estate Development Association, is Maine's premier 350 member-driven nonprofit real estate association supporting responsible real estate development in Maine. Our members show up and step up to support and promote public policies in real estate that are fair, practical, and predictable. I'd also like to thank our members, and particularly to those who have made the first season of MEREDA Matters possible with their sponsorships, including our gold sponsors, NBT Bank and Landry French Construction. Thank you for your support. With us today is Jeanne Hulit, President and CEO of Maine Community Bank, and Steve deCastro, President and CEO of Gorham Savings Bank. Thank you both for joining.
Our pleasure.
Glad to be here.
So this is sort of interesting timing to have a podcast. Jeanne and I had scheduled this about a month ago, and then I got a text about a week ago saying the two of you are joining forces. And I think I'd like to hear a lot about that. There haven't been a tremendous amount of mergers in the state of Maine in the last years besides the creation of Maine Community Bank, where Biddeford Savings Bank merged with
Mechanic
Savings Bank. And once again, another merger. So tell me, how did this come about?
Well, I guess I would say, the industry is very competitive. Maine is, some people say, overbanked. There's a lot of banks for a small population.
There's no such thing.
And, the cost of running banks, it's higher. We have to invest in technology and regulatory oversight. And increasingly, our relationships are larger. So by coming together, we have more capital so that we can support the growth of the businesses that we do business with, as well as invest in the technology for the future.
And I will tell you, pulling off a transaction like this is really hard. As Jeanne and I can both attest, it takes a lot of effort, a lot of agreement and alignment. And thankfully, in this case, we found a way to kind of see a path forward for both of our organizations and feel like it positions us really well for the future.
So I want to hear the nitty-gritty on this. Who approached who? Did somebody have this idea, we want to build a super bank?
I would say that Steve and I are both on the Maine Bankers Association Executive Committee. And as bankers, we're always talking about what's happening in the industry and where we see trends going. And it was just a natural conversation that evolved. I wouldn't say who said what first. It's just conversations that all CEOs are having about how do we get more traction and, more scale to serve the market. So it was a natural conversation. If you look at our geographies, our bank has a big presence in York County and Androscoggin County and some branches in Cumberland, whereas Gorham Savings has a huge presence in Cumberland County. So it was kind of a no-brainer to look at our geography and think about what a nice fit it would be if there was a path to do it. This is a merger of equals, not an acquisition of one over the other. When you're working with stock banks, it's a lot easier just to come in and buy the bank. This is a real merger of equals, a combination that required, both sides feeling like this was a win-win.
Exactly. It really started with a social cocktail hour at the top of the East. And I think we both kind of looked at each other and said, there's some logic here. Is there an appetite on either side to continue the discussion? And the answer was yes.
So this was announced 5 days ago-ish, 6 days ago?
10 days ago.
10 days ago?
10 days ago, yeah.
So I've got to imagine for you both to announce this sort of merger, you've been talking about this for quite some time. I mean, how
We have.
long? Yeah, I
18 months.
18 months. Okay, so this is a year and a half in the wake.
Yeah.
Is it hard to sort of keep this quiet from the community when these talks are going on? I mean, it's a very small community.
It's very hard. Very hard to keep it quiet from your employees and your team members. That's the hardest part, because we signed a non-disclosure agreement early on so that we could keep talking and not run the risk of disrupting each other's organizations. So it's been a close hold for a long time, and it was a burden I was really relieved to get rid of.
Absolutely. I think we both said, the weekend after the announcement was the best weekend of sleep I've had in quite a while. And frankly, it was a surprise to me that we didn't have more leakage of rumors anyway. There was nothing. And I think it's a tribute to both organizations that we respected the process and really knew that it was important that we collectively controlled our message to the community.
Oh yeah, I can imagine. I can picture, one investor or board member hearing about this and telling a friend, and it just, the whole state knows 2 weeks later.
Yeah,
Exactly.
But yeah, this was pretty closely kept.
it was.
I didn't find out till the day before or the day of, or whenever I got that notification. But when going through this sort of process, and Jeanne, you've just done this 2 years ago. What is the biggest barrier besides keeping it quiet? I mean, is it fitting people into the right places? Is it matching up clientele?
It's a little of all of the above. I think that one of the advantages of this merger and of our prior one with Mechanics and Biddeford is all the banks are struggling for talent. So we have retirements. We have, Maine is the oldest state in the nation. There wasn't a lot of young people coming into banking, particularly after the credit crisis. So by coming together, we enhance the bench and we enhance the depth of our talent. So that, to me, wasn't the hardest part. I think that the biggest lift is systems, core conversion, making sure we have the right systems. Gorham Savings operates with certain contracts and systems. We operate with others, and making the decision about which system to use, and then negotiating all those contracts again, I think is a huge lift, and that's what we're heading into.
Yeah, and I'd just add that, from our perspective, the biggest importance was around, and you mentioned people, which is number one, but pushing that a little further is just culture and sort of strategic vision. So, we're not looking to, take over the world. We're not looking to go sort of beyond the strong footprint we have, but this will help position us, Josh, in this market, the size of transactions just continues to get bigger and bigger. And so for us to be able to service those customers, we need to grow too. And this is a fantastic way to do it.
Yeah, I couldn't agree more. This will definitely open up some opportunities for me personally. So I can imagine how everybody else might feel as well. But how about succession planning? You both are high-powered CEOs of two of the most notable banks in Maine. How do you work this out amongst yourselves? Who gets to put the crown on their head?
Well, that was actually one of the fun parts of this transaction. One of my first questions to Steve was to ask how old he is.
Which I understand, Steve is also a recipient of some Young Bankers Award. You're an accomplished. I saw some junior achievement.
Yeah, junior achievement. Yeah. Yes, I'd like. Yeah, I guess it's a great way to define it. Young. Since I was on the board for 25 years at junior achievement, so it only took me that long to. No, anyway, no, I love junior achievement, but yeah, no, that certainly was a key element of the discussion, figuring out kind of the leadership structure.
And Steve is in his early 50s and I'm 65. So it was a really easy call to say, Steve is going to be the successor CEO. I'll stay on as president to help with the integration because of my experience putting two banks together and helping blend the cultures and the communication. And then by the time all that's done, I'll probably be close to 67 and ready to retire.
It's probably not a better
So it
way
really
to go.
helped with succession planning.
Yeah, that's a fair point.
And I am really pleased to have Jeanne's experience and knowledge of doing an integration like this, and just her natural leadership skills. It's going to be really beneficial for the entire organization.
Sure. Yeah. And the bank is keeping the name Maine Community Bank.
Yes.
Any big changes other than lending sizes and doubling of personnel, and what else is coming out here? Is there going to be some announcements or anything along those lines?
I think one of the first things we want to do is minimize any negative impact to customers through the integration process.
What sort of negative impact would even come out of something like this?
Well, it's just change.
Got it.
It's more
Getting used to it.
account numbers, debit cards, et cetera, when you move from one core operating system to the other. So those are the decisions we have to make, is how do you make that transition to one platform and services to all our customers without having a customer lose something or be inconvenienced. And one of the exciting things about this transaction is we'll end up with the largest branch franchise in the 3 counties we serve.
How many branches?
21.
21, wow.
And
So convenient for the
convenience,
for the customers
more
at the very least.
ATMs.
Yeah.
I'm excited. They have video teller machines that we don't have. Gorham Savings has wealth management. We have a deep footprint and experience in York County and Androscoggin County. So these are good complements that I think will benefit the banks and the customers.
Any strategies in dealing with this sort of merger? Any techniques that leadership has tried to bring some sort of cohesion to the organization, or is sort of one step at a time?
I'd say it's been one step at a time, but deliberate steps. I mean, we spent I'd say the process, it started 18 months ago, but really in earnest at the beginning of the year, and accelerated a lot over the summer and into the fall. We spent a lot of time over the past month or so on communication. So, we really wanted to make sure that we got our teams excited about this merger, and they are. I'd say the one thing that has been, I don't want to say a pleasant surprise. I'm thrilled to see that, the team at Gorham Savings Bank, they heard the news. It was a surprise, so they took them a bit to kind of digest that. We had a number of meetings to talk about the deal. They were on board, ready to go. And even before I was ready, they're like, all right, when can we meet our friends at Maine Community Bank? When can we sort of talk about how we put these together? So encouraging signs.
Any sort of synergies in that sort of merger? I mean, do you have twice the size of a board now? Are you going to have to go through some layoff process now or later? Where is the...
There's no layoffs. Our boards will be, the new board will be a large board, 8 from Gorham and 8 from Maine Community Bank. We have a couple of board members that are retiring this year, so it was a nice timing and fit. So we'll have a balanced board, no layoffs at all. We want to keep everybody through the process. We need everybody through the process. So to your question about, the approach, I think communication is key. Both communicating, Steve and I and our boards communicating, so we go into it with a shared expectation about how we're going to manage the bank and govern. But the communication, now that it's public, with our colleagues, just to make sure that they're feeling informed, very transparent process. People don't, get spooked that they're going to wake up one day and, their world has changed too much. I think we want to bring them along the journey the entire time.
And I'd say, if our combined organizations, we probably spend, Josh, like close to $10 million on technology every year. On a combined basis, maybe we spend 8 or 7, and that dividend accrues back to the organization, to our employees, to our community, and so we feel like that's the real opportunity here from a pure business standpoint.
Yeah, you're sort of combining your R&D budgets as well, and optimizing.
We both have, internal exams, external exams, regulatory oversight. All those costs now is going to be done once instead of twice. All the technology investment, just all of that.
So it's interesting you brought up some of the pricing synergies. I think, we've got some highly sophisticated real estate people and other bankers on the listening to this podcast at some point or another. I think they're going to want to know a little bit more of the intimate details. Has anybody looked at how much it costs to merge these sorts of banks? It's got to be a huge expense associated, not just your time and energy, but there's going to be, do you have some sort of corporate people that come in and specialize in this sort of activity to make sure things are lined up?
Yeah, I mean, we both have advisors we're working with, but one of the things, and I think it's a understandable area for us to inform people around, is how we're owned. Our banks are both mutual savings banks, so we don't have private shareholders or public shareholders. And so when we put these two organizations together, there is no financial cost other than the payments we make to our advisors to help us kind of get through the process. So it financially, this transaction makes sense all day long.
Yeah, and I think that's just an important thing to know. Maine is dominated by mutual savings banks. The publicly traded banks are sort of a small handful, and then you've got the big regionals, TD, Bank of America, et cetera. But mutual savings are sort of a construct that's common in New England, and it's the old banks that were founded by the founding fathers of the community. And the idea is that the profits of the bank, we are for profit, but those profits get reinvested in the community, into the bank, and it never gets distributed. So the more money we save through these integrations, the more money we can invest in the community, can invest in lending, and pay our colleagues more.
So what do you have to do to qualify as a mutual bank? Is it a certain portion of revenue is spent on the community? Is it a portion of the EBITDA?
It's a charter. Our charters both go back 156 years. I don't know if are mutual savings even created these days?
I haven't heard of one in a long time.
Well, how are new banks structured that are created today?
They're stock banks.
Stock banks. Yeah. And going away from the merger for a second, you, Jeanne, used to be president of Northeast?
I was president of the Northeast Division of Maine, yeah.
And how that's a different structure bank entirely.
They're a stock bank.
Stock bank. So having effectively run two different types of banks, where do you see the benefits and drawbacks of each?
I love the mutual savings bank model. Mutual savings banks have the long haul view. When you're with a stock bank, you're answering to your analysts every quarter. You have to provide dividends. You're answering to your stockholders. You're driven by the greatest return to your shareholder, not necessarily the greatest return to the community. So a mutual bank has the vision for reinvesting in the community and sort of lifting all boats. And that's sort of the philosophy. I think that if you look at the charters of our bank and the mission statement of our bank and the mission statement of Gorham Savings, you'll see the same key mission to invest in our communities, our colleagues, and our customers. And, stock banks can say that, but they're really giving returns to their shareholders. We don't have shareholders that are driving that bus.
Yeah, and oftentimes, not exclusively, but on the mutual side, the local control is. Jeanne and I both worked for larger banks and now for mutual banks, and it is. Every market is a little bit different, so to be able to have a custom-made approach for, the Southern Maine as opposed to a broader multi-state organization, being able to make those loan decisions locally with a board of directors who all come from this area, there's a really, you feel good about it, and there's a good reason why.
Yeah. Josh, you're so young. You haven't been through the banking cycles that, Steve and I have been through when the large banks make decisions out of whether it's out of New Jersey or Cleveland or Boston that says, we have to turn off the spigot on this type of lending. And suddenly, regardless of what the market is in Maine, somebody in Cleveland has said, we're done with hospitality or we're done with investor real estate.
I ran into that for a bit in COVID. They shut off my hospitality lending.
Yeah, so there's a lot of that can go on that doesn't bear resemblance to what's happening in your local community. So by having somebody who you can talk to and say, well, nationally hospitality is doing this, but we all knew there was this huge inflight into Maine post-COVID where hospitality was in huge demand. So whereas a big national bank might be saying that hospitality across the country doesn't make sense, we knew in Maine in certain markets it did. So that local influence and local decision making makes all the difference. And again, by being the combined bank, our legal lending limit to one borrower is about $60 million. I mean, that's a community bank that can go a long way with local businesses. Whereas we won't do $60 million, that's legal. Our house limit would be closer to 30.
What are the house limits now? With individually?
About, for us, about half that amount, 15 million.
Each?
Yeah, about 20.
20. Interesting. Yeah, I guess I haven't, I've only lived through the '08 recession. I do feel like COVID was sort of a recession in some aspects, but I've seen, from the lending perspective, I've obviously done a few different transactions in other states like Charleston or Florida, and it's very interesting, how different the banking scenes are down there versus up here. Like you had said at the beginning, it's much more competitive here. But I had some feedback, 2 years ago, I was trying to buy an industrial building in Charleston, and they said, well, industrial, no one's buying industrial anymore. And I'm thinking to myself, everybody in Maine's buying industrial. This is the hottest commodity. So even though we're not necessarily in a recession, I don't feel we're in a recession right now. There is this shift in banking that seems to happen disproportionately in different areas of the country. What do you predict will happen in the next 24 months in banking or in this economy?
I don't know. Jerome Powell just created a party, so it's really
feeling
hard
the
to
hangover.
see. Yeah, it's a little hard to see. I mean, I think that from my perspective, interest rates have never gone up this fast, and I expected it to hold.
They're dropping the last 2-3 weeks.
Well, yes, they are. That was the party that Jerome let loose with his comments about rates. But I would say, I don't think we're going to have a downturn. I think that we're going to just hold steady unless there's an external shock like war and things we can't control.
You don't think Jerome Powell reducing rates these past few weeks is sort of a signal that there won't be a recession? Or do you think this is a signal that there definitely will be a recession?
I feel like, I guess from my perspective, I think his comments were more to say, hey, we're at the end of our rate increase cycle. No promises that we're going to act on. Although the dot plot indicates there'll be rate cuts, I don't think he's saying we're going to cut rates anytime soon. They know it's an election year. I think they're going to be very careful about what they do in this upcoming year. But from our perspective, it's good news that the rate increases appear to be over, and inflation seems to be getting in a place that's more acceptable. But we'll see some challenges on businesses. I mean, costs have escalated a lot, and so they're trying to absorb that, having a harder time passing that on to their customers. So we'll probably see a little more strain on the credit side. To date, we've seen almost none. So we're starting from an extremely strong perspective. People are working. That's another really excellent part of where we stand today. But there just seems to be a general uneasiness with the economy. So that may have some impact. But as Jeanne said, it doesn't feel like we're headed for some real dark days.
Certainly did about 2 months ago when his last hike took place. But now that he's sort of dropping down, I'm hopeful that this means a little bit more of what we had last year. Basking in the sun of the competitive lending rates.
Game back on, right?
Yeah.
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 I think, as Steve mentioned, we have had a lot of growth when the rates were so low. As loans have like 5-year balloons and they reset, and they're going to be reset in this new interest rate environment, that's going to sting a little bit for some folks. So I think that's one of the things as bankers we're looking at is what are our maturing loans? What rate are they at currently? What is it going to reset to in today's rate environment? How's their cash flow? The consumer seems to, the U.S. economy is driven by consumer spending, and the consumer is still spending, but they are taking on more credit debt than they have in the last couple of years. And so the inflation, while inflation is going down, those prices got pretty high, and the prices aren't going down. There's no deflation happening. So that consumer is still absorbing the higher interest rates, the higher cost of goods. And so that in itself is having a dampening effect. But I don't think it's a recession.
Yeah, a lot of my clients are reaching out to me, obviously, and saying, hey, interest rates are up 100, 200 basis points. Why are cap rates still the same? And last year, we saw a lot of cooling in the market. A lot of deals, especially Q1 this year, were falling apart or dying out because, banks were changing interest rates on their term sheets, and the acquisition price that they were underwriting, couldn't sustain the increase. And I started to see a little bit of decline in Q2, Q3 this year. I think Q4, sellers really started to understand that there's a direct correlation between increasing interest rates and increasing cap rates. And up until Powell decided to start lowering interest rates, I was starting to see sellers a little bit more anxious to sell, a little bit of realization that the prices they were getting the past 2 years were no longer around. But I'm sort of interested to see what's going to happen in the next 2 years, because it took a year, 6 months to a year, for sellers to react to the interest rate market. It'll be interesting to see if they bounce back immediately and say, no, 3% is coming back. I'm going to hold on my price.
I don't think 3% is coming back. I mean, we're paying. I mean, that's the other thing is one of the parts of the business model that everybody needs to think about is what banks are paying on deposits. We put in fixed rate loans at whatever rate you originated at. Maybe it was 3%, or today's we're originating them at 7.5%, 8%. But we're funding a lot of this with deposits that have lots of choices. The rates, we have to compete with credit unions. We have to compete with online banks to keep those deposits. And those rates are going up quite a bit. So our net interest margin is squeezed. And as banks' net interest margins get squeezed, sort of regardless of your cap rate, we have an appetite for what price we're going to have on that loan to make sure that we're not exacerbating a narrow net interest margin to begin with. Yeah,
it's the classic bad yield curve shape for banks. An inverted yield curve is not great for us. We have deposits coming in at the short end of the curve, but we lend out on the middle and longer end of the curve. So the good news is we've had really good credit, so that's helpful. But margins are tight for the entire banking industry.
Have you come across any delinquencies or defaults in this past year? People who purchased 5 caps and when the rates hiked to 7, they couldn't refinance, the rates were up. Anybody handing the keys back to your banks?
We have not seen that. No.
Not
yet. Maine, as usual, doesn't see the spikes
swings,
or the valleys that some of the other markets see. Maine's evolved. I feel like it's grown. It's probably a little more of a peak and valley, but we have not seen that. And I think, again, it goes back to that local knowledge of the market as well. There's less of that transactional relationship.
And very much an ability to have a conversation with the decision makers at the bank on what you're experiencing and what you might need to do to restructure or reposition your portfolio so that it's working for you and the bank.
So, I'm curious, we've talked about the merger, we've talked about the economy. I'd love to hear more about both of you individually. Jeanne, you're obviously about to be my next door neighbor, so you and I know each other pretty well. Steve, we might have met once before this, yep. But I don't know a whole lot about you. Tell me about your history in banking. What led you to CEO and president of Gorham and future CEO and president of Maine Community?
Sure. Yeah. So I grew up in Massachusetts, but went to college in Maine. Met my lovely wife.
Where in Maine?
She's from Auburn, Maine. I went to Colby College. We met there, we after graduate school, I settled in Portland, and I started to work for Fleet Bank in their commercial banking group, which now is Bank of America, and progressed through that part of the business. Became a commercial banker. Did that I was at B of A for 14 years. In the last couple of years of my career there, I moved over to manage their private banking group, which is called U.S. Trust. The big recession hit in 2007, 2008, and I took a job at KeyBank doing the same thing, managing their private banking group, and did that for 6 years. All the while, Chris Emmons, my predecessor at Gorham Savings, he and I knew each other pretty well. He was getting towards the end of his time in the role, and so he and I had chatted about having me come over and, apprentice under him, and if it worked out, I would be his successor, and that's what happened.
So as Josh, I have a checkered past. I got into banking later in life. I didn't get into banking until I was thinking about this morning. I think I was 33 or 34. And I had been in economic development before that. I worked for the state Department of Economic Community Development, worked for the Portland Chamber, worked briefly in commercial real estate with John Gendron. So I sort of always had a passion for economic development, and then had the opportunity to go into banking at KeyBank in the international division at the time. That was when the banks were still managed by state, and learned banking. And I found banking to be one of the best economic development jobs you can have. If you're providing the capital, you're really an economic development supercharger.
But then you betrayed banking and you went to run Candle Company.
Well, there was a lot in between there. So
you had it with banking. This was it. We're leaving.
No, I was at Key for 10 years. I did the international banking. Then I moved into commercial lending. Then I was at Citizens for, I think, 9 years in commercial banking and a middle market lender. And I left banking in 2009 after the Great Recession, because I really wanted to make a difference in helping companies grow, and their small businesses were hurting, and a lot of the big banks like Citizens, which I was at the time, had their own challenges. So I went to the SBA, and I worked in the Boston office running the New England region, and then in DC running the Office of Capital Access, which is what provides the loan guarantees for small businesses to help them grow. And then it ended up as the acting administrator before coming back to banking. I never wanted to move to DC. I never wanted to stay in government. I'm originally from DC, and so I always wanted to live in Maine. So I came back and took the job at Northeast Bank. And, it was a great growth experience, but it wasn't the community banking feel that I wanted. So I stepped out and helped a former client of mine run his company as president of Village Candle and position it for sale. And then was lucky enough to get tapped for this job. So
banking, government, Candle, back to banking.
Yes.
The life cycle of a typical banker.
Exactly.
Yes. Yeah.
And now you've gone on to raise a banking dynasty, is my understanding.
Yes, I have my son and my daughter-in-law are bankers and doing great. My son is an SBA lender for a nationwide non-bank lender, ReadyCap, and he's killing it. It's a passion for him to, again, help small businesses with commercial lending. And my daughter-in-law, as you know, is on the MEREDA board, I believe now.
Yes, she is, as of 2 weeks ago.
Yeah, and very proud of her, Gwen. And she is a mortgage loan officer for U.S. Bank. And my daughter, who chose not to go into banking because she's the artistic side of the family, is in media and works with Aaron O'Valley on Maine Life Media. So Steve, I'm at a disadvantage with you. I obviously know Jeanne's family pretty well. I had to do a little bit of research prior to this podcast so that I could engage you.
What did you find?
Well, it's sort of interesting. I found you guys are both Boston University alums. Is that right?
Yep.
I never finished my MBA, but I went to BU for my MBA.
Okay.
I was working full time at KeyBank, raising 2 kids and driving from Portland to Boston. After 2 years of that, I was like, I know enough. I'm going to learn it on the job. So I didn't finish the MBA.
So one graduated BU, one did not, but you said you went to Colby.
Yeah, undergrad at Colby, and then I did the MBA program at BU. When I graduated from Colby in 1992, the job market was not good at all. And so I said, you know what, I'll just take the time now and do my MBA. So I did it in 2 years, lived at home, and so yeah.
Banged it out.
Yep.
Yeah, so this, the difference in age between us, you graduated your undergrad in 92. I graduated my undergrad at American University in 1980. So
There was no overlap. But at least the conversation at your board where you reconnected and came up with the idea for this merger,
Yeah.
I've got to imagine.
Exactly. Well, we've known each other for
Yeah.
many years.
when Steve was at Bank of America, I was at Citizens both at 100 Middle Street. So we'd see each other walking to Starbucks.
I too have had an office at 100
There
Commercial
you
Street.
go. Not,
Wait,
not
100
Middle.
100 Middle. Ah,
Yeah, right across
okay.
from the police station.
I spend a lot of time there when I'm seeing my lawyers.
There you go. Right. Yeah, it was a very convenient building. You know, you
Very
had the
convenient.
lawyers, you had the bankers.
Yeah. At one point, I had a closing in that building, and I went to the third floor to grab the bank's attorney, the second floor to grab the banker, and then the sixth or seventh floor to grab my lawyer, and just running up and down this building
Very
to get
efficient.
this. Yeah, exactly. So, is there anything else that either of you would like to add about this merger or each other's lives or future expectations?
I guess I just want to say how excited I am that we are coming together to be a $2.7 billion mutual savings bank focused on central and southern Maine. You know, when you think about the size of our bank, there are other banks around the same size in assets, but they're all over the state of Maine, or they are in New Hampshire, Vermont, Massachusetts in their asset size. Our assets are all right in our home community. And that's what we pride, and that was the vision, I think, when we started talking about the logic of this merger, is we both recognize we need to grow, but our competitors are coming into our market because this is the highest growth market of the state, the 3 counties that we serve. And if we're going to grow, but we want to stay in our communities and really dominate our markets and deeply penetrate our markets, it made sense to come together, sort of throw some elbows, keep the others out, and not focus on leaving Maine to grow. We need to grow within the communities we already serve, and I think that's the exciting part of this merger.
Will this enable you to do transactions outside of the state as well, or really just double your market share here?
We have the ability to do transactions outside the state. It's just not our mission. It's not where our focus is.
And it's always connected to a good client we have locally.
All right. Well, Steve, any final words before we...
I am just thrilled we were able to put this together. I mean, it's a roller coaster, as you can imagine, and there are times you're like, I don't know. And to get to this point, it's just been wonderful. It's been great working with Jeanne to make this happen. She and I both, we have different personalities, but it has worked exceptionally well in terms of making progress with our boards and with our employees. So, yeah.
Well, on behalf of the Maine Real Estate Development Association, thank you both for joining us today and for participating in this podcast.
It's our pleasure. Nice to see you, Josh.
Thanks, Josh. Yeah, appreciate it.
Thank you to all our members, and thank you to those that have helped make this season of MEREDA Matters possible with their sponsorship, including sponsors NBT Bank and Landry French. Also, we have to thank the wonderful and amazing Shelley Clark, the heart of MEREDA, and our executive director. Thanks, everyone. Until next time, be well.